PayPal is up 10% today after putting some crazy good earnings out. The stock has broken out from this descending wedge on the weekly chart, and unfortunately, I never got to add more to my long-term position on PayPal. If you guys watch this channel for the past couple of months and or years, we were watching PayPal trading up around $184, and I was saying that if it ever got down to sub 100, I would start buying PayPal long-term. I ended up buying PayPal right around $95 back in April. I've still been holding on to that position. I hoped that it was going to continue to drop down to the 50s so I could buy more, but earnings came out and they're pretty damn good. So what we're going to do is go through earnings. We're going to be talking about the numbers. We're going to be going over the value of the company, why I started buying around this price, and what I would be buying more with. So hit the like button, subscribe to this channel, check out our Discord community down below. It's completely free. Guys get access to free courses, free live streams, free seminars, free webinars. There's over 8,000 people in our community. Guys, there's a lot of bullshit information out there when it comes to investing, and a lot of people lose money. So we've given away this free community for you guys. There's over 8,000 people strong. The link is going to be in the description. And if you have any tickers you want me to go over long term, go and put them down in our long-term chat of that Discord. So earnings came in at 93 cents per share, adjusted versus 86 cents per share. So killed it there on EPS. Revenue is 6.81 billion versus 6.79 billion. Revenue grew 9% year over year, and they reported $341 million net loss compared with a $1 billion profit during the year earlier. PayPal at the end of the quarter had 429 million active accounts, which is up 6% year over year, but below the 423 the consensus polled. The company stressed about the progress it has made on capital efficiency and says it's trying to reduce its costs by more than $900 million this year. It said annualized benefits from the cuts and other changes should have at least a $1.3 billion in 2023. PayPal announced a new $15 billion share buyback program 4 years after kicking off a $10 billion program. So when a company is going to buy back their shares, they believe that the stock is at a super cheap price, right? The opposite is when they start giving shares out to the public and selling shares. That's when they start diluting you as a shareholder. They're actually doing the opposite. They're buying shares back. And the only way a company buys shares back is when they think the price of it is undervalued. So really, really good. And looking at PayPal, like, this thing has just really not had a good year. Year to date, PayPal was trading this time last year up around $200. If we look at, in January of $200. If we look at 1 year ago today, $300. And if we look at the past 5 years, we were hitting highs at 301. And then before again here in February of 2021, we hit highs at 304. So 52-week high is at 294. 52-week low is at $69. So we're talking about a very volatile year for PayPal, which is pretty crazy. So market cap 113 billion, not a small company. PE ratio is 31, not the best, but still not bad. 5-year PE is at 38. Profit margins is at 13.9%. 5 years at 15.3. Price to sales is 4, which is not bad. No dividend. Now, looking at this company, there's a couple of things that enticed me. I don't think I got the best price. Like, in theory, I really want PayPal down at $60, $50, which is why I didn't go hard when it came to actually buying some. I bought a small amount. I wanted to have a total of $35,000 or $40,000 in PayPal, so I started with $10,000. And when it comes to a lot of my personal investments, that's usually what I do. I'll start by saying, what's the max amount of money I want in a position? For PayPal, it was 30 grand. All right, I'm going to split it up into 3 buys. Now, looking at the income statement and the balance sheet, this company has done nothing but grow. So look at revenue from 13 billion in 2018 to 25 billion now. So even year over year, 2021 to 2022, very sizable growth. Same situation in gross profits, 11 billion to 13 billion. Net income, however, this is one thing to watch. They lost money in 2021 when they were profitable before. They lost 160 million in 2021. They lost 176 million in 2022. These numbers are not updated, but still, overall, bigger loss. And for me, that's not really a good sign, but because it's getting down into a pretty solid deal, that's why I decided to buy it. So look at current assets versus total liabilities at this very moment. We have total liabilities down here at $55.2 billion. if we were to go ahead and scroll up, you're going to see that our total assets are at 75 billion. So they can go ahead, they can cut a check, they can pay all of that off tomorrow, which is something that I actually look for. Now, the PE, the 5-year, is not like 20, 25, 30. It's at 38, so it's still pretty high. Now, analyzing the stock for potential growth and where I really want to be buying at. If we look at the past 10 years, there's just no numbers. But if we go over the past 5 years, the company has grown at 16.9%. Past 1 year, 12%. So conservatively, I'm going to say 8%, 10%, 12% for growth. Profit margins past 5 has been 15, past 1 year has been 14. So let's just say low side 8, 10, 15%. Just we'll do 12. 10, 15, we'll do 15. Free cash flow 15. Let's do 15, 20, 21. 15, 20, 22 is the high side. PE, let's do 20, 25, 30. Actually, their PE ratio would be lower probably in the next 10 years. Let's do 15, 20, 25. I think that's probably your best bet. I'd always rather be conservative when I'm looking to invest in something than to be a little bit overzealous, because if a conservative number is good, then at the end of the day, I'm going to smash it if my numbers aren't conservative. And so you can see, if I believed that everything on the right side here was going to end up working out and that they'd be able to grow at 12% revenue growth, profit margin at 15%, free cash flow at 22%, PE at 25%, PE to free cash flow, and I'm looking for a 15% return per year minimally, I'm looking to buy anywhere under $92. And that's when I started buying, was under 100. Now my goal was $60. And you can see that based off of these middle assumptions, which honestly, these middle assumptions I think are extremely obtainable. Like, I come in very conservative on everything. So I think the mid is like really, really good. And that's at $46, but I would be buying this company pretty heavily around 60 or $50. So I own some, I'll be buying some more, but I need this thing to fall once again pretty significantly. And I think that it can. I think that if the whole market drops, we could see PayPal back down at 67. I don't know if we'll ever see it down at 36. But for me, if we get back down to the $67, $70 price point, I'll be buying the living crap out of this. Guys, thanks for all the support. Let me know any tickers you want me to do down below. I got SoFi and Roblox probably going to be coming out tomorrow. I will be away this weekend. Check out our Discord community down below. If you want access to all of my trades, access to all of my long-term investments, you can join for $25 per month. It is less than a freaking cup of coffee to join our premium group. You get access to all my trades, all of our senior analyst trades, all of my long-term investments, and I live stream over there a couple days a week with them. Thanks for all the support, guys. Have a great day. Peace.